Welcome to TMC Connect. Thank you guys so much for being here today. I'm Tony Bramley. I'm the Director of Business Development at the Mortgage Collaborative. And with us today, we have Laird Nasuli and Bernard Nasuli from iEmergent. And they are going to be giving us some insight into the HMDA data from 2022. Before we get started, I just want to let you know that you are on mute, but we do want you guys to ask questions, lots of questions. So please feel free to drop those in the chat or in the Q&A, and we'll be going through those as they come in. So just shoot those over to us and we will get those to Laird and to Bernard. There'll be a follow-up email that comes out tomorrow. It'll have a link to this recording as well as additional information and links. So be sure and take a look at that. And I think that is it. So Laird, I'm going to hand it over to you.
I'm going to hand it over to Bernard. But as he's talking, I'm going to let you guys know we decided to have a little bit more fun with this. So we have 3 different trivia questions and about the HMDA data this year. And we're going to ask it. And the first person who gets the right answer in the chat, we're going to send a $10 Starbucks gift card. So be on the lookout because it's going to be really clear when we're asking it.
All right. Well, thank you, Laird. Hopefully everyone can see the screen here. Welcome to our 22 HMDA Insights. The HMDA was released in, I believe, late March of this year, so just about a month ago. And so it's always a race to be able to get to the data, to download it, and then to start analyzing it to see to figure out some of these insights. So we're going to look at the U.S. mortgage market for last year. But essentially, I want to put last year into context. And so we're actually going to do an analysis of here are the purchase and refinance dollars since 2021. So purchase is in green, refi is in blue. And you can kind of see, the wave. Obviously, there have been some recessions in here, especially starting in 2008, 2009, and so on. And then all of a sudden, we have COVID and a giant wave, especially of refi. So that is to give you an idea of what's been happening in the past 23 years. But now on the next slide, we're going to focus on the past 5 or 6 years. So this is what the past 6 years look like. Again, 2018 was the last time that there was a drop from 2016 to 2017. And so I started at 17, and we're looking at, okay, we started at 17, 1.67 trillion, 1.62. So we're just kind of hovering. And then all of a sudden in 19, things start to pick up. And then obviously with COVID in 2020 and 2021, things go through the roof, especially for refis. Their interest rates were kept pretty much artificially low, well below the 2% mark that the Fed tries to implement every year. Excuse me, that's for inflation. But the interest rates were also around 2%. And so the idea was, okay, in 2020, 2021, there are also lots of stimulus dollars being pumped into the economy. And we see people moving to kind of remote work and just a different approach during COVID. And so therefore the home becomes a much more important place if you're going to be spending all of your time indoors, at least in these 2 years. And so there's a just massive amount of refi and also of purchase. And then we come back to 2022, which really is an extension of the historical trend line, if we're looking at 17, 18, and 19. But before we get to that trend line, let's look at why right now things feel bad. Things feel bad because we went from 4.38 trillion to half of that, to 2.3. So refis dropped 70%. Purchases dropped 16%. Overall. And so when we combine the two, there was like a 46% drop in total volume. That does not feel good. And that's why right now it feels like it's the end of the world. Okay. But if we take out the COVID fueled years of 2020 and 2021, so essentially our graph looks like this, Then we can add our trend line and actually see that if we, so if we exclude COVID, then total volume increased 1.7 percentage points from 2.26 trillion to 2.3 trillion. And specifically, purchase increased 30% from 19 to 2022. So, we've always touted at iEmergent that you need to make sure that your business, your lending business, is built on the purchase forecast, but also just the purchase business in general. And so the idea is that no matter the interest rates, people are always going to need homes. People are always going to need to move. You can't get a new job out of state, for example, and then say, well, I'm not going to take it because interest rates are too high. No, you're going to move. And so there's always that growth in purchase, unless obviously there's a recession like we saw in 2008. But the historical trend going back these past years indicates that purchase is continuing to increase. So with that, I'm going to pass it back to Laird.
All right, and I'm going to share my screen. Okay, and here we go. So this is your first trivia question as Bernard gets started. And that question is, how many lenders reported to HMDA in 2022? So let's see. It doesn't. Why don't you all send your best guess, and the person closest to the actual number will get the gift card. So I'm going to skip over the slide that tells us all about that, and we'll go back to it. So Bernard mentioned, the importance of, looking at this, knowing how to match your market. And, he was talking about that overall look, purchase and refi look at the HMDA. But what I am going to dig into now, a couple of different things. I'm going to break the data down by segment. And then we're going to also break the data down by, metro market, because that's really when you're looking at how can you match and how can you benefit and take, get as much as you can out of your markets. You have to really go down to that market and market segment level of detail. And so the first thing I'm going to talk about is that, well, actually, I am going to go here, you guys. This is gonna give some stuff away, but anyway. So one of the things that we look at when we were talking about the split, we obviously, Bernard went over the purchase and refi numbers and what that looked like, but I like to look at, okay, who was doing the lending? And one of the things we saw, slightly change from 2021 to 2022 was the type of lending done by different institutions. And so the two charts at the bottom here really show the differences between, or the numbers, the originations by banks, IMBs, and credit unions. So you can see here that in 2021, 31% of the loan units for purchase were originated by banks, and that moved up to 32.6% of purchase in 2022. In refi, banks were about 30.4%, bumped up a lot to 35% in 2022. IMBs, you can see a little drop in purchase from 21 to 22, but still, the bulk of purchase loans, purchase units are being originated by IMBs. And then also in refi, 62.3 to 52.3% there. And when you look at this, what's really interesting is that bump up in refi that we see in credit unions. So in 2021, about 7.3% of refi units were originated by credit unions, but in 2022, that jumped up to 12.6%. Now, if you go over here and you look at the same thing by purchase dollars, you can see that it looks a little different and that banks typically have a little bit higher share. If you look up here at the chart, you can see why that is. So the average loan size overall for a bank is 376,000-ish, IMB 320,000-ish, And a credit union is a lot lower at 258 or 258,000. And again, these are just averages, so they're rounding up for that reason. But you can see here that that's what the difference between the original, the percentages by loan unit and the percentages by loan dollar. Also looking at this, that I thought was pretty interesting was just that difference in the purchase and refis. So, and these numbers here, I'm going to explain. When I say it was a 45.2% purchase year, that's of total originations. That's not just between purchase and refi. That's purchase, refi, home improvement, and other loan purposes. So banks had about 45.2% purchase. IMB is much higher at 64.4%, credit unions at about 25%. And if you look across this whole chart, which I didn't put on here because it didn't fit, credit unions do a little bit bigger percent of not just the refinance, but percentage-wise compared to their others was what they did with home improvement and home equity. And that's what most other falls under home equity. And so that magic number is, and we got any answers yet, Bernard? Any more coming in?
Yeah, well, that's the thing is we just need to make sure to give everyone like a 1 minute period of time in order to answer answers. We did have a winner, Jen Peachman, congratulations. Her guess was 4,000 and the answer was 4323.
4323, yes. So that is the answer of the number of HMDA reporters in 2022. So now let's look though, and this, you guys know me, you know that this is like my favorite thing to talk about. So let's talk about borrower group and the split there. And what I look at, not to give anything away, and I don't think this is a trivia question, but there was not one segment. I kept waiting, but there was not a segment from 21 to 2022 that saw an increase. What did see an increase though, and this is what I was looking at, was, not trying to see, were there more, loans by Black borrowers or more loans by Pacific Islanders? No, what I was looking at was the penetration rate. And I'm going to emphasize too, that all the information that I'm going to be talking about in terms of the breakouts are purchase, with the purchase market being this really the biggest deal in 2022 and again in 2023. I want you to start thinking about 2022 in the context of 2023, because one thing I will say as we go through this, our forecast is showing that 2023 is going to be more like 2022 than 21 or 20, not just obviously in size, but also in the way that what that segmentation and the penetration rates for different segments are. So what I saw that I thought was promising was for most of the minority borrower groups, we saw an increase in the penetration rates. So in 2020, Asians were almost 6% of the purchase loans, Blacks were 7.5, Hispanic close to 11, Native American or Indigenous peoples, Native American, Native Alaskan, just about 0.75%, and then the Pacific Islander, Native Hawaiian, almost 0.25%. And this is not Hispanic white, and so that is basically the opposite of these other four. That's the non-minority group. But you can see that Asian moves up in 2021, and again up to 8.4-ish in 2022. Black increased slightly, not as much, and Hispanic is up over 11% now to 11.26%. So that's in loan units, and you can see that you take those same numbers and you look in loan dollars. You can see that in loan dollars, the Asian borrower group had 11.6% of the originations. Now, if you looked at the average loan sizes, typically between the different minority groups, but race and ethnicity, Asians have a higher purchase average loan size than the average. So that's why they may have 8.36% of total, but 11.6% of dollars, or of total units, but then 11.6% of dollars. And the opposite holds true with Black borrowers, 7.88% of units down, and again, this is still up, but only 6.72% of the dollars. Hispanic also drops from, if you're talking units, 11.26% of units, and then about 10% of the dollars originated in 2020 when 2022 went to Hispanics. And so looking at that, I still think that, even though we're seeing that trend down in overall opportunity, the fact that these groups are still moving up in terms of penetration rate, that's really good. What's not really good, and the other side of that is one of the reasons that those numbers are moving up is because the household count, the household penetration rate of those groups is moving up. And so the question is this increase in the penetration rate in loans is it bigger or is it growing faster than that increase in households? And unfortunately, I think the answer is probably no. But in order for it to pick up, this is where we're really talking about. It has to be an even bigger year over year growth to not only go up and really match the speed of households, but go beyond that so that you're actually getting a bigger percent of those households that are originating. And that's the equation that we'll start working on and actually decreasing that home ownership gap. So by segment, this is also a little bit, I saw some, I think this is a pretty significant change. In 2020, about 28.3% of all loans were government. In 2022, that dropped to 23.6%. Okay, I think that's a pretty big change. A lot of times we don't see huge swings with any of these segments, but that in only 2 years is a big shift. And most of that, if you look here at the breakout, conforming jumbo is equaling this conventional here, FHA, VA, and FSA equaling government. You can see that the biggest jump really came in the conforming space. So 66.2% of all units were conforming to about 70.6 or 71% of all units in 2022. In dollars, you see a similar jump. You just see that it's lower again because of the fact that average loan size for conforming is smaller than the average loan size for jumbo. So you see jumbo go up in 21 and back down. FHA just continues the trek down. VA down and up. And then FSA, continuing to go down in terms of the penetration rate. And again, none of these segments saw an increase in actual loan count or dollars from 2021 to 2022. Last one to look at is by income. And I think this is also interesting to me. And it does reflect, I think, some of what we're seeing in terms of housing and affordability. You can see here, okay? So in 2020, about 28.5% of all purchase units were originated to LMI borrowers. That's dropped to 26.1. Again, not a huge drop, but still a drop in penetration rate. If you look at this from the dollar side, well, that can't be right. That has to be. That's not 74%. That it should be 17% to about 14%. So also a drop in dollars in the low to moderate income space. For a lot of low to moderate income borrowers from 2020 to 2022. And later on, we're going to dig in and look a little bit more at the details of, what does the pricing look like on those loans? What are these different groups using product-wise? We're going to get into that a little bit later. And this one is one we never look at. And I thought it was interesting, not so much because it's changing a lot, but just because it indicates, when you're thinking about home buyers, that 25 to 44 range is really, for the 2018 all the way up to 2022. That's where majority of purchase loans are coming from. It's not to say there still isn't some significant opportunity, 9%, 9.3, 8.7% in that, 55 to 61 age cohort. But I think it's, this right here is your prime opportunity. And some of that, obviously, those percentages are going to be much higher if you're looking at first-time home buyer, but not all of this is first-time home buyer, as you know. So, probably a big chunk of the 25 to 34 is, But once you get into the 35 to 44, a lot of those are repeat buyers. And so we spent some time just talking about what, the actual originated loans, but what happened to apps in 2022. And what I wanted to do is not just look at the overall application actions for 2022, but look at how they compare to the last, last couple of years. And so this is what I noticed. I was looking, and we were excited to see the denial rate go down from 2021 or 2020 to 2021. But then you see here in 2022, it bumped back up to 10.2%. And completions stay pretty consistent. And unbooked, what that really is, those are, accepted, or those are approved but not accepted loans. Withdrawn, that was a surprise to me too. About 16.2% of all applications were withdrawn. And then obviously, because denials are up and the withdrawals are up, you see that overall, pull through rate go down. And I think that's a pretty significant drop overall. So again, from 71.5% origination pull through in 2018 down to 67.3% in 2022. So that tells you, some of those numbers are coming from, majority is still, that drop we're seeing from 2020 to, or 2021 to 2022 is coming because of a drop in applications, but there is also a drop in the pull through rate. So now we're going to dig in, since we don't have 3 hours, unfortunately, because we could spend so much on this. It's, such a rich and comprehensive data set. But now we're going to talk a little bit about metro markets. And
hey, Larry,
Mhm.
there's a question from Melissa Langdale.
Sure.
She was talking about the withdrawal rates. Could they be increasing because customer expectations have shifted and they're shopping more today than before?
Yeah, I think so. I think that withdrawals, like some of it, if you're looking at it from a, all over rate, I mean, I think they're shopping more, so there's more apps going out to different lenders. I think the other thing that we're seeing, with the withdrawal is, it could be that as things started maybe looking down a little bit in the economy, there was, I don't want to say a panic, but the decision not to purchase a home could have occurred. But I do think the majority of that is the shopping around, and I mean, I don't think it has as much to do with, it's difficult to know if that withdrawal rate is a withdrawal completely out of the pool and not originating, or if it just means that's a withdrawal, maybe potentially went with another lender. And that same thing with that unbooked, approved but not accepted, that number. Does that answer it? I hope. Okay, so the next part we're going to talk about are the differences in markets. And this is something that, I don't know if you guys saw any of our LinkedIn posts earlier about the top 25 lenders. And everyone gets excited, everyone shares that. And for me, it's interesting because for all intents and purposes, where you fall and who are the top lenders really only matter at a market level, because what you think of as your market is really where you should be looking at the segmentation, where you should be looking at from a competitive landscape, and where you should be looking to find out what tomorrow's opportunities will be. And so so that's why I really like to dig in. And again, there's no market, in the United States that just had a boom year from 2021 to 2022. But as we're going to see, some markets, and from a purchase perspective, didn't drop as much as others. And so, I went backwards. Here we go. So my question now is, in purchase units, you look at the top 50 metro areas, does anyone have a guess on which metro area saw the least amount of decline in purchase?
Okay, so let's give everyone about 30 seconds to enter some answers.
Bernard, you're keeping track of all this, right?
I am, yes. All right. So I see Melissa and I see Chrissy and I see Bruce. Last 10 seconds for a guess.
And I'm thinking about doing this, keeping this trivia up and doing it on LinkedIn with some harder ones over the next couple of weeks. Because every time I come across something, I think, I wonder if someone knows that, and we have this list of like 30 different obscure different data points that I think are really interesting. And it's not just the data point, it's the discussion around them that is important. All right.
All right.
So I'm going to move on, and we're going to say the in total purchase and refi loan units, not just purchase, and this shows you how much we're dropping here. Oklahoma City had of the top 50 lenders, I know I'm showing 30 here, but of the top 50 lenders, Oklahoma City's overall purchase and refi loan originations for 2022 compared to 2021 dropped only 37.3%. So that puts into context, again, part of this is because we're bringing refi, and those numbers, are in the 70s in many markets, but you can see that Oklahoma City dropped. Dropped the least. So that's the winner on the purchase and refi side. We'll get to the purchase in a second. But one of the things I look at here, again, I care about how different lenders are doing. But when you start looking at the markets, you can see the difference and it's kind of interesting to think about, markets that changed a lot. And so what I have on this slide here is a rank of the top 30 markets in purchase and refi loans. And then this is the rank in markets for purchase and refi dollars. Well, obviously the differences here have a lot to do with whether or not the average loan size is increasing. If it's increasing much faster in one market than another, you might see a metro area where it is maybe ranked, let's see, I got a good one here, San Francisco, number 19 overall for purchase and refi units, but jumps all the way up to number 4 for purchase and refi dollars. And so you can see here that there's some changes. Houston had a pretty big bump up. So it used to be number 12. Now it's number 7. New York stays up there, but quite frankly, New York stays at the top because it has so many, because the household count is so big. Obviously Los Angeles has a little bit higher average loan size across the board. And so that bumps up in, that dropped from number 1 to number 2. But New York and Los Angeles pretty much dominate those dollars every year. DC, and then you can see that Dallas also went from number 10 overall last year to number 5 overall. The only ones that here I have these ones that are yellow. These are new lenders. So San Antonio and Raleigh weren't in the top 30 before. Now they are. And San Antonio also on the unit size bumped up. And it's interesting when you look at this though, these are just enormous markets. But when you get down here, it's not that these are small markets, it's just they're very different markets. And so when you're thinking about how things have changed, focus on how your markets are doing, because that's really what's going to matter when you start looking at strategies for the next couple of years.
So Laird, I think we're at time.
I thought it was, seriously, I thought it was 40.
Nope, we're at time.
Wow.
Maybe Tony and Amy, maybe this is an opportunity to do a part 2. Maybe next week after, but.
I didn't even get to the TMC lender stuff.
That's okay. You can take another 5 minutes. It's okay.
I did not know that. Anyway, so answer that question. We'll just answer the questions here. We'll get into the others. The markets that dropped the least, Dallas fell the least. Only in purchase loans, Dallas only dropped 10% in purchase units from 2022 to 2021. The other one I was really excited to ask was, what's the market that has the greatest number of loans originated by TMC? And that market is also Dallas in purchase and refi on both across the track. So, and that's not like, that's all the TMC market. So I took all the TMC lenders that had a respondent ID or LAI could find, put it in there. And these are the rankings of importance or just pure TMC dollars. And so I was just really excited to do that, to look at all the different metrics for the lenders in TMC. And there's a lot more analysis I can do with this. And again, I can't believe that it's a 30-minute thing. Oh, well.
Sorry.
This is a good tease. This is a good tease for part 2.
Right. So I guess we don't even have time for questions then. This is just cracking me up. I should have known. If anyone's ever heard me do this, happens all the time, no matter what the time limit is. All right, so we got 2 trivias. I'd love to do a part 2. We could not mess with the first part, but
and I think that we should. The next one can be focused on everything that you came away from the Mortgage Collaborative numbers. So yeah, so we will put that together and put it back out. Actually, we can go ahead and send anybody who's on the call today, we can send you a direct invitation for that part 2 so that you will know that it is there. And we will get that out to you early next week. So thank you all so much for joining, Laird. Thank you so much, Bernard. Thank you. I love your passion. I love your enthusiasm. I love everything that you bring to the conversation. So thank you so much. Thank you everyone for being here. We will follow up via email with the recording of this part 1 and part 1 of the deck that you saw today. And then we will have a follow-up for part 2, as well as a part 2 of this deck later next week. So thank you all for being here. We appreciate it. Have a great day and enjoy your weekend.
Thanks, Tony. Thanks, everyone.
Thanks, Tony,
Bye.
Amy. Appreciate it.
Bye-bye.